Zacks rank buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks rank buys. Time for more aggressive growth stocks now with Bill Wilton, our aggressive growth stock analyst at Zacks.com. It's been busy, hard at work, scouring the market for these aggressive growth opportunities here. And you came up with a couple today. OSI Systems, OSIS, is the ticker symbol. And I'll let you tell us what they do because you can probably shorten it up. It's some
yeah, well,
big description here.
They design optical and electromechanical sensors. They also do a lot of work with fiber optics and telecommunications. They are in a few different areas, aerospace, obviously telecommunications, industrial automation, things like that for you know, production lines and things like that.
Right.
They just reported their third quarter results on the 30th of last month. They ended up earning 24 cents a share, which was 20% higher than both the consensus and last year's third quarter results, which were both 20 cents. They raised the lower end of their guidance, so that's very bullish, and they're projecting double-digit growth, which is actually in 20 and 23% for this year and the year following.
Okay.
Currently maintain a Zacks #1 rating, and those growth values that I mentioned earlier, or those growth projections that I mentioned earlier, are actually fairly valued with a PEG ratio of just under 1.0, which is kind of the sweet spot as far as PEG ratios go.
All right.
As you see on the chart, they made a nice consolidating pattern here as they headed into their most recent earnings announcement, which was followed up by a breakout. Hopefully the shares will continue. Worst case scenario, they'll probably use that top trend line there as a level of support.
How long do these breakouts normally last?
You know, it varies with everything. I mean, as long as they can continue to grow, the breakout should go on and on.
So it varies company to company.
Yeah, and it also depends on where the PE's at. You know, if we call them a PE contraction, which is really a nice way of saying the stock will go down unless the earnings go up, because a PE, you know, the PE can only get so high before people start to say this is overvalued. I'm not going to pay for this.
Right.
So if the earnings continue to grow like the way they are, the breakout should continue. Unless earnings keep going up with the stock, then it'll probably come back down to earth.
All right, then you've also turned up American Medical Systems Holdings, AMMD. They just beat the street's expectations, and they're in what end of the medical field?
They provide medical devices for urological disorders.
It's pretty specific.
Yeah, and they provide, actually they market directly to individual physicians, so they've got a very direct supply chain that they go through. It's, you know, from the supply house straight to the doctor's office. Okay. You know, like you said, they did just beat the street by about 10 cents, which is fantastic considering that they were only expected to earn 15 cents a share. Revenues were up about 2.7%. I've got a little figure there in parentheses, 6.4%. That's what it would have been had they not had a negative impact due to the increasing dollar this year. So they actually did a lot better, but just were offset by a strengthening dollar.
So just to clarify for those maybe who came into the conversation when you were explaining what they did, their medical devices are prosthetic in nature, correct?
Mm-hmm. Well,
okay.
Yeah.
Without getting too descriptive here, but
keep it PG-13.
Yeah. Okay.
This was their seventh consecutive earnings surprise, and estimates are up, and they're projected to grow about 37% this year.
That's a good growth percentage.
Absolutely. And just like the stock I previously mentioned, those growth rates are coming in at a pretty solid value. The PEG ratio is about 0.9, which is a great value, and its shares are trading hands at about 14 times forward earnings, and they're also maintaining a Zacks rank of a #1. The chart, nothing too spectacular as far as formations go here, but you can see the positive reaction that the market had to the latest earnings announcement, and shares are surging.
All right. Do you own either of these two?
I do not.
You can take a look at some more stocks that Bill has under the aggressive growth category. He's written up a whole slew of these opportunities for you. There's a small archive of them on Zacks.com. You link to them off of our homepage in the upper right-hand corner by clicking on the current headline next to the aggressive growth category. With Bill Wilton, I'm Terry Ruffalo.